from Shriram Transport Finance joining in on the show right now. Mr. Revankar, good to have you on the show. I'm just going by a second quarter performance, which is clearly in line with what the street was estimating. There's been lower provisioning, credit cost has been aided by 13% PAT growth. Help us understand what's leading to this kind of a performance and whether or not it's going to sustain in the next few quarters as well.
Good morning. Basically, I believe the recovery from wave two has been very sharp because by July we could see most of the economic activities across the country continue to be prior to the wave two. That is between Jan to March, we witnessed a similar kind of activity. So our collections were very good, almost 99% for the second quarter. And that led to improvement in the asset quality, higher disbursement, and we see a bigger credit demand coming from the rural market now. So I believe urban market is also reviving. So both urban and rural together reviving and having a better credit demand. And in spite of fuel price increase, the freight rate increase has really helped because of the increased demand. I think overall market seems to be doing very well, and we expect it to do much better in the next couple of quarters.
Sure. Mr. Revankar, your used car segment saw higher disbursement drive as well, and we saw good AUM growth too. You've continued with your double-digit AUM growth guidance for the second half. What gives you this kind of confidence, and what do you think is going to aid this AUM growth of double-digit going forward for you?
Yeah, to touch upon the used car, the personal transportation demand has gone up significantly. Many of the households are now wanting to own a vehicle for their personal transportation, especially in the tier 2 and 3 towns. That has led to some demand in used car, but used vehicle per se in the rural market has been in good demand because of the bumper agri crop. And also the agri crop, last 3 years continuously, the agri output is growing. That means more number of vehicles are required to move that to right places, whether the warehouse or mills or to the market. So I think that is creating a bigger demand. And of course, the good road network in the last 4-5 years is continuing to help the rural market much better, increasing the demand from the rural credit requirement.
Good morning. I also wanted to ask you about the proposed merger with the holdco, the insurance company, this, that, and the other. What will be the impact on this listed company?
See, right now we are just evaluating. We are not come to any conclusion on how the merger should take place or how it will look like. We have not really made any kind of conclusion on the same. So we are just looking out the overall synergy for the both the companies, listed companies, Shriram Transport and Shriram City Union. If at all we feel, because both of them are in the niche segment, both are doing well, both are growing. And if at all we have to come together, then the synergy has to be much better. It has to help all the customers, the employees and the shareholders and the lenders. So we would like to see that if everyone is benefiting, then we would like to look at a merger proposition. Otherwise, we are happy to grow individually in their respective businesses.
Okay. I thought it would be interesting to ask about that because that's obviously an update that the markets are watching out for. The other question I had for you, and this is based on the brokerage reports I was reading after the earnings report, and some of them, for example, are saying that yes, disbursements have improved, but the AUM growth is lagging. How would you react to that observation?
AUM growth will come in the second half, mainly because the growth has been mostly in the small ticket loans, especially in the LCVs and ICV segment. In heavy vehicle segment, the growth is not come, which is a bigger ticket size. Once the heavy vehicle demand start improving, even though heavy vehicle sales have been higher compared to the previous 2 years in the last quarters. If you look at the year-on-year performance in the quarter, the heavy vehicle sales have been higher. But the overall heavy vehicle market to expand, it may take time. And especially with the government infrastructure project, with the Gati Shakti Yojana and other infrastructure activities, I believe the demand for heavy vehicle will come up sharply. And that should lead to AUM growth of double digit.
Sure. Also wanted to understand, looking at the current market construct, Mr. Revankar, highlight some of the key challenges that the industry per se is facing right now, and especially vehicle financers.
No, I think the industry is doing quite well compared to what that we have seen in the last couple of years. Post ILFS in 2018, there has been some challenges for the NBFC industry per se. But the bank lending has improved. Capital market support has come back, which was not there for many of the smaller NBFCs on NCD placement. All of them have come back, and I feel the growth of NBFC have been quite good in the last 1 year, especially, and it is likely to improve further as even the real estate also is doing well now, or likely to do much better in coming quarters. I feel the demand will come back for both the housing requirement, FMCG movement, the white goods requirement. Okay, one area where there is some challenges is because of chip shortage. Vehicle availability has come down to some extent. The manufacturing of cars and to some extent some commercial vehicle were less than the demand. So that will create some kind of a premium to these products for time being. I think once the supply improves, the growth will also improve for all the NBFCs.
Right, interesting. No, the reason that I asked is because, of course, there are concerns around, the fuel prices currently, and of course, at what stage the CV cycle is currently at. But let's move on. Let's talk about the NPA stress, because as I see, it's been contained for most players. And especially for you at Shriram Transport, we have seen a significant improvement in your NPAs as well. Share with us what is your outlook, assessing what kind of asset quality you're currently seeing, and whether or not there's going to be stress anytime soon, or do you think the trajectory is going to continue to improve going forward as well?
Yeah, touching upon the fuel price, I would like to share that the demand for CNG vehicle have gone up, especially in the area where CNG is available. The CNG sale has been almost double that from the previous year in this first half of the year. So that's indication that customers are likely to move towards CNG vehicle in commercial vehicle. And of course, three-wheeler and taxi segment all have moved into CNG, or to some extent, wherever possible, EV. So there will be definitely a movement towards CNG, LNG, and the EV over the next couple of years, or maybe up to 3 to 4 years. There will be movement. So that's where the customers will adjust. And also there is the ability to pass on the increased cost to the end consumer and or the manufacturer. So truckers normally don't carry the increased fuel cost on themselves. So that's the advantage for them. And coming to the NPA, we are very confident the way situation, the market and the economy has improved, that NPA will further come down. And we have targeted by March to bring down a gross stage 3 to below 7 and net NPA below 4. That's the target we have kept, and we're very confident in the next 2 quarters we'll be able to reach that.
So let's leave it at that. That's decoding the earnings highlight for you as far as Shriram Transport goes. Another headline, no clarity yet on the